I'm a levels trader. If I can draw a horizontal line on a chart, that's a level. So support and resistance, Fibonacci, the previous day's value, the initial balance, the opening range, those are all things that I watch very, very closely every single day. The way I trade today, there's really only two trades that I ever really focus on, and that's a previous day's value area play, and that's the initial balance play. Those are two trades that I watch every single day.
So previous day value, I'm assuming that means a form of the average day of yesterday, or is it highs and lows of yesterday?
So I take every night, I mark off a chart, and I take the previous day's value, and that value is where 70% of the trading took place. And I draw,
from a volume perspective.
Right. I draw a block on the chart that says here's where the previous 70% of the previous day's trading took place. When if price opens outside of that value area and it moves into that value area, on a 5-minute chart, I wait until a candle establishes in that value.
Okay.
And if it establishes in that value, there's an 80% rule that it's going to fill value. So if you're coming down into value,
you sell it off.
establishes and sells off, there's an 80% chance it's going to fill to the other side of value. If it comes up into value, 80% rule is going to fill to the top. That's one of the trades. So that's
Very
an 80%
interesting.
statistic. And Jim Dalton teaches that. And,
That's very interesting.
And from a market profile perspective, it's very interesting to look at. The other trade is the initial balance. The initial balance is the first hour of trading.
Okay.
So when the first hour has happened on the day, I have two lines on the chart. I have the IB high and the IB low.
Of that initial hour.
Of the initial balance. So that's the initial balance. When price comes back up and tests or goes down and tests the IB low or tests the IB high, there is a 90% stat that says it's going to reject it.
So essentially, when you've defined that range of the first hour, and then it comes back to test it, you just sell it at the open, stop loss at the high, and
there's a 90% chance it will reject it on the first test, not second test, first test.
Okay, let's explore both of these. So the first one is the 70% of the volume of the previous day. You mark it out as a point of interest or area. First of all,
it's a value area block. Yeah.
That let's say on average, the average daily range, as a proportion to the range of the 70% of the volume. Typically, what have you found that is a ratio? That the 70% of the volume is usually a 10% of that ADR, or is it usually a 50? Just to kind of know how big that zone usually is.
The zone varies dramatically. There's days that zone's extremely tight. There's days on a strong trending day, if we had a lot of volume and it was a strong trending day, those value areas can be a 200-point range. Those are days I love. Because
so you prefer the big zone ones because there's more room to trade
especially
within.
when we open outside of value on the next day. Because when we open outside of value on the next day and we move into value, that means that the value area play is in effect. If we open inside of value, that typically means a chop day.
I see.
So I really want to open outside of value, watch action move back into value, and then take the value area play.
And the second model, which is kind of like the range and then tap and go, have you found that you can tap and go and then use the first model as a zone that the 70% value where it's magnetized towards? So you tap and go into the zone and then use the closure of the zone as your final take profit.
You can, absolutely can.
Okay.
And so on the value area plays, I'll give myself a little bit more room on those because I'm more confident in that. I mean, there's an 80% probability it's going to fill. There's a 90% probability on the IB trade. Okay. And so what's interesting is I have an IB indicator that plots it. I use NinjaTrader as my platform, and I use a Trade Devils indicator that plots IB for me on my NinjaTrader. And it has a stat down in the corner that tells you how many times that trade works over the previous weeks. Okay. It's alarming. We're talking it's 80-90% of the time it works. Now, it's not that it's going to be a rejection and it's just going to trend the opposite.
I understand. It might just be a move, a bounce and go.
On NQ, if you can pick up a 10-point wick, that's a great trade.